Hi everyone, and welcome back to the Web3 channel. My name is Zach. In this video, we're looking at a warning that was sort of put out by UK's advertising watchdog. I thought we'd go into this and see what it's about. Crypto red alert issued by UK's advertising watchdog. We're seeing this, of course, on Yahoo Finance. Let's have a look at what's going on here. Crypto assets such as Bitcoin and Ethereum are a red alert priority for the UK's advertising watchdog, it said on Wednesday, as it banned 7 cryptocurrency ads for breaking its rules, including ones by Coinbase and Papa John's. The Advertising Standards Authority has said its rulings follow proactive monitoring of crypto asset ads and form part of a wider project that will eventually shape specific guidance around advertising these products in 2022, which means that we'll see essentially crypto advertising regulations, I guess, from the ASA. It added that consumers need to know about the risks of investing in crypto assets, and companies should make sure that their ads aren't misleading or socially irresponsible and don't take advantage of consumers' lack of awareness around these complex and volatile products. A Twitter bio for a cryptocurrency trading platform, Coinbase, a cryptocurrency promotion by Papa John's, and a digital poster for online cryptocurrency exchange Paywood were all banned, mainly for irresponsibly taking advantage of consumers in the experience. The Coinbase ad also failed to illustrate the risk of the investment, the ASA said. A YouTube video promoting Xmo Exchange, an in-app ad for Luno Money, a paid-for Facebook ad for Coinbase Europe, along with an ad for eToro, were also among the offenders. eToro is actually a very, very large advertiser on YouTube for crypto and Web3 space. We'll continue to review crypto asset ads over the next few months, not just for cryptocurrencies, but also for and fan tokens, and this will feed into our future enforcement work and guidance. Crypto assets are a red priority issue for us, so we're conducting proactive monitoring and interventions where we find issues, said Miles Lockwood, Director of Complaints and Investigation. Our rulings published today and over the next few weeks will shape follow-up enforcement work in the new year to bring all crypto asset ads into line with our expectations and will form the basis of updated guidance. We won't hesitate to take action against ads that break our rules. We encourage anyone with any concerns about ads they've seen to get in touch. Elizabeth Raymouth, director at Your Mind Media, told Yahoo Finance the ban of the crypto-related ads by the UK watchdog comes as regulators move to set up rules around the crypto industry in general, be it trading or advertising, to protect retail users. While cryptocurrencies have gained significant popularity recently, they are still unknown to many consumers. The understanding of cryptocurrencies, their financial impact, and the risk they involve remains limited among the general public, and as such, advertising them can be seen as concerning. Many regulators around the world are cracking down on cryptos as they become increasingly popular and mainstream. The Financial Conduct Authority, i.e. the FCA, has previously warned on the risks of investing in cryptos, warning consumers they stand to lose all the money because the space is not regulated. It has launched an 11 million campaign designed to help consumers identify the risks cryptos may pose. A report published in October showed the majority, 69% of Brits, believe the FCA is in charge of regulating cryptocurrencies. The survey also found that 58% of those investing in high-risk financial products say hype on social media and in the news lies behind their investment decisions. One thing I would be very interested to know, and we're going to have a look at this report very soon, is who did they ask? Are they asking people who are investing in crypto, or are they asking the general public? Moving forward, we actually have a video here, what are the risks in investing in cryptocurrency, and I'm actually interested to see what they have to say here. This is Yahoo Finance.
Usual in the cryptocurrency market are 3 main risks to investing in the cryptocurrency market: volatility, custody, and fraud. Let's take those one by one. Firstly, volatility. Price swings of 10% in a single day are not unusual in the cryptocurrency market, and so if you do invest, you should be prepared to see the value of your investment fluctuate pretty wildly. There's also the issue that it could go to zero. The UK's Financial Conduct Authority recently told Brits that they should be prepared to lose all their money if they invest with cryptocurrency. It's an unregulated market, meaning there are no investor protections if things do go wrong. Secondly, custody. Once you invest in cryptocurrency, you have to figure out how to store your cryptocurrency. Unlike cash or shares, you can't easily put it with a bank or a stockbroker. People have traditionally held cryptocurrency in so-called digital wallets, but the complexity of managing passwords securely has caught a lot of people out. Chainalysis, a data company, estimates that around 20% of the world's entire supply of Bitcoin has been lost in wallets where people have forgotten their passwords. That's around $140 billion worth of Bitcoin that is stranded. People can store Bitcoin or other cryptocurrencies with exchanges, but historically these have been vulnerable to hacking attacks. At least $500 million was lost through hack attacks last year, according to estimates, most of that targeted at exchanges. Finally, and linked to hacks, there's the issue of fraud. This is an unregulated market, meaning there are a lot of bad actors out there. Watch out for people promising to transfer you cryptocurrency or perhaps fraudulently issuing their own cryptocurrency. You should always do thorough research into the cryptocurrencies you're investing in and any exchanges that you're looking to invest with.
So I think a good roundup of this is certain there are frauds, absolutely. As someone who's a bull in crypto, there is absolutely fraud out there. When it comes to hardware when it comes to wallets in general, don't forget your password. How about that? And then thirdly, absolutely spot on, exchanges have been hacked and people have lost their currency. Moving forward, 7 in 10 Brits mistakenly believe cryptocurrencies are regulated. The majority of Brits believe the FCA is in charge of regulating cryptocurrencies, a new study has shown. As a result, new investors were unlikely to understand the lack of protection and the risk to their money with investing. The research released on Wednesday surveyed 1,000 people aged between 18 and 40 who invest in high-risk investment products. Okay. The survey also found that 58% of those investing in high-risk financial products say hype on social media and the news lies behind their investment decisions. Okay. Alongside this, 76% of those aged under 40 who have invested in high-risk products such as crypto and forex say they were driven by competition with friends, family, acquaintances, and their own past investments. As the FCA launched an 11 million Invest Smart campaign designed to help consumers identify the risk cryptos may pose, it found that few of the high-risk investors it surveyed were investing for the long haul. Just 1 in 5 respondents were considering holding the most recent investments for more than a year, and less than 1 in 10 were for more than 5 years. This despite 60% of those surveyed saying they prefer more stable returns than investment that rise and fall dramatically, investments that typically come with lower returns requiring longer investment. This comes as over 1 million UK investors increased their holdings or bought a high-risk investment during the pandemic. The regulator is concerned that new investors are increasingly accessing higher risk investments which may not be right for them or reflect their risk tolerance. The FCA's 5-year Invest Smart campaign is intended to target those who are inexperienced in investing, possibly dipping their toe for the first time. It aims to reach those investors through social media and online, where much of the hype around investment happens. The regulator is encouraging consumers to be invest smart when thinking about investments. In particular, it recommends 5 important questions to ask yourself. Am I comfortable with the level of risk? Do I understand the investment being offered to me? Are my investments regulated? Am I protected if the investment provider or my advisor goes out of business? Should I get financial advice? And I think it's the same video. Some truly important notes to take away from this. This comes down to what's known in the crypto community and in the Web3 community as DYOR, which is do your own research. Another one of this is a case of simply making sure that you do your due diligence. There are definitely issues out there. Can they catch you out? Yes, absolutely. They can. But realistically, this is what happens with most investors, is most investors do not know what they're doing in not just in crypto, in anything, whether you're investing in real estate